Hey guys, it's me Mabani Kolusile, Forex Academy. I wanted to make a video explaining one concept that I shared with people 2 weeks back on gold. We had when I was sharing a structure like this, and I will go through other a few pairs to show you how this behavior happens. This is called the power of 3. The market start with accumulation, then they manipulate traders, then they distribute the data they have captured here and leave all the sellers trapped. Then they move and create liquidity, then they close each and every day. And this movement is given from higher time frame to lower time frame. In this case, I'll just show you on gold here. On Friday, the previous week, the week of the 5th, the market was accumulating. Then when Monday, when we had the market open, the market raised and created a liquidity. Then they dropped, inducing more buyers to buy on this market. Then they dropped rapidly, and I was part of those retail traders who were trying to buy this market while it was dropping. And if I could have waited and the market could have came to my target and reach my target from previous week anticipations and entries based on the Fibonacci that I was using, Fibonacci retracements. If I could have used the target that I was using on the previous week, I could have get an early entry on this pair. And then what I was trying to explain on the power of 3 is they will drop and create the weekly low. Once they have the weekly low, they will rise. Like I was explaining here, it's after the accumulation they will create the high, then they will drop and leave more people by creating the weekly low. Then they will rise. As they rise here, then they accumulate during the week. It's Monday, Tuesday, Wednesday, then they start to move again. Look how crucial they use the opening of the week, which is this. Once they have created the high of the week, they will come to test the weekly open, then they bounce on it, then they gave us this entry. I was giving most of my students this that trade, and then I want to also show you on other pairs. Let me go to GBPSD. Let me unlock this one, and then zoom in this one. Here we are. What they will do, they will open the week. This is weekly open, and I want you to see how they use the weekly open as their target to kill or to complete their weekly movement. They give us the low of the week, then they retraces, meaning on this structure we had something like this. Is Monday open, then they manipulate the movement from the low, then they create the high of the week, then after creating the high of the week they dropped to create the low of the week, then they close in between. We have a structure like this on this one. This is what they do. They give you a false move, then manipulation to induce more sellers to sell in this market, to use their stops on these zones. Then they kill them. Then look how they use this week to induce more buyers to buy on this market. Can you even think how many buyers were on this trade? Then they just use the 50% of this candle to drop on this market. Then they dropped from Thursday till Friday, then they close in just below the Monday open. Now look, we have this structure. We had accumulation, then the market also induces more buyers to buy on this market. Remember, those who were trapped on the previous week on this chart, they want to push the market to go to these zones, but what the market does, it goes back and bounce on the previous week Monday open, then they drop. Then they use this zone as the way of trapping more buyers to go into this to these zones to buy the market. But since we know this behavior of the market, that the market will induce more buyers, then by after accumulation they will manipulate the market, then create the highs, then drop, and trapping all those who are buying, like they did here. Now we have a similar structure on this one. We have Monday open, and then manipulation, then the market drops, then we create the high of the week, then we go to create the low of the week, then we close just below the Monday open. Same applies. One of my members were buying this market on Wednesday previous, that week, the week of the 3rd of February. Then I was telling them that we are going to be selling this market because there are zones that the market has to go and fill. Now on the previous week we had the market has already created the low, and then they didn't want to take out those lows. Then when the market opens, they open with a gap low, then they induces more buyers to buy in this market. Then they created this liquidity, which I might think they might come and test it for this week. They might, because they didn't even come to test the Monday open London session and the New York session, and this is what I'm hoping that they will do. Let me first correct my Fibonacci. I'm using this week as the peak of now we have the crossover. Then I'll put in my Fibonacci on this zone, or because the market have retraces back, I'll use this this zone, and then I'm expecting the market to test this sniper zone on this week, then rise with the week. Once taken out this, then they will drop on the zone and then close off. This is what I see on this pair, GBP USD, and then if I have to trade this, I will wait for the market and we'll see if they react to, they will give you, if they do give us the high, or just to give us more liquidity here, then drop rapidly on Monday, Tuesday, or Tuesday midnight, then they will rise to take out the liquidity that they have created on this. This is how my Fibonacci determines that zone that they killed more traders on that week. Now, as I was giving people gold the previous week, I want you to see how the market makers reacted towards the Monday open, like they did on GBP USD. Look how they use that zone to create an entry for you, and then if you have used that Monday open, you could have had a selling opportunity here previous week. Then on gold we have this structure like this, and on the video that I shared we still have that structure that I have drawn for people so that you could understand what I was talking about. We had accumulation, then the market induces more buyers to buy in this market, then they drop to create the lows of the week. Then once they have created the lows of the week, the market arise and leave those trapped traders below. Then they rises to create the high of the week. Then they induces more sellers to sell in this market, and look how they use the Monday open to give you an entry to go on this trade. So for this week on gold, I have two scenarios that what the market will do. I put in my Fibonacci from the low of the week to the point where we created the high previous week. Then possibly the market might do this. They might create the liquidity, false move, then they might drop to these zones because these zones were not tested, but they used that Monday open or the fair value gap that they have created previous week, and then I'll be expecting this move. This will be my main target move. The 1803 market value, that will be my target for this week. My bias is bullish on this pair, guys, like I did on GBP USD, and then on gold is also the same. If this is not the case, they might just drop and then create this movement, guys. They might drop and then take out these lows, then they will close in between the Monday open and between the Monday open and the high of the week. And then if we have to break down, I just want to break down this behavior of power of 3 so that other people could understand what I'm talking about. Let me zoom in this. This is how the market does, guys. Let's say is the beginning of the week, because it has to be a 5 candle, 1 2 3 4 5. It's Friday. If this is Monday, let's say it's Monday, Tuesday, Wednesday, Thursday, Friday, then the market opens, it gives us false move, then creates the high, then close here. Then on Monday they do the same, they open, manipulation, then distribution, then they close here. Remember, now we are having the distribution movement, then we had a lot of accumulation, then the market didn't even come to test the Monday open. But look how they use the Monday open of this week as the entry going forward on this market. And look how crucial this weekly open create an open on Thursday this week, and then Friday this week, this day. Then also they move in the same direction, they keep on bouncing on those zones. I will also show you with let's say we take this one. It's Monday open, they create the high of the week, which is false move, then they create the liquidity for more sellers to sell this market, where they use their stop loss on these zones. Then on Tuesday, the Monday the market open, then they drop to create more liquidity. Remember, we now have more liquidity here, and the market wants to trade to this zone. Then they create this structure, then they rise and just don't take out those stops, then they close. Then on Wednesday, what they do, they open, then they take out those that were buying from Monday with the liquidity candle like this one, then they drop, go into the weekly open, which is this one, then they close just on top on the weekly open, which is here. Then they use market open, then they take liquidity from that Monday open, then they drop, then they take out those liquidity that they have created on Tuesday, then they drop. Now we have this liquidity. Look how they do. They open, look at that liquidity. Once they open, they take out those who are using their stops on those zones, then they drop below, then they close on this area or these zones. Now on Monday, I was also buying this pair, guys. When the market rise to give us the false move beginning of the week, I was part of that market, and then I got trapped. I got trapped with the retail traders that were buying that market. Then on the weekly open, which is this one, I will put this line on here as our weekly open, and I want to show you how they kill people. And then they drop, create the low of the week. Then on Tuesday, when I was telling more people to buy those pairs, because we have already made a correction move, it's Tuesday's open, then they take out the lows that they have created there. They are not coming back to the zone again. Then they rise to where, to test the weekly market open. Then they drop below the previous week Friday. Then on Thursday, the is daily open, then they drop the 50% of this candle. If you are using OTE, so it was gonna be like this. I want to just show you. They use the tank entry, and if you are using the fair value gap zone, you could have been profit and use the tank as your stop loss. Then you could have been in a big profit, because they just on Friday, this was Tuesday, Wednesday, it's Monday, Tuesday, Wednesday, Thursday. we don't have data for this pair for Friday, but nevertheless I just shared how the market behaves in this format, in this way, guys. This is what they do each and every day. So if you are in my channel, guys, all the pairs that I'm trading is GBP USD, NZD USD, AUD USD, gold, Euro USD, Euro JPY, CHF JPY, GBP JPY, USD JPY, USD CHF, USD CAD, and also USD ZAR. I will also share my setups for this week. I have already did with GBP USD and Euro USD, and also gold. So I will share with you the setups for this week. Hope you enjoy this video, guys. Hi Papato. I wanted to make it short, but it has exceeded the time that I was targeting, and sorry for the late video. We had a load shedding in our town, and hope you enjoy this week, guys. Have a beautiful week. Enjoy. Hey Papato.